Hey guys, and welcome to another market update with your Lewisburg team. I have with me Dan Robichaud, portfolio manager for our international mandates. How's it going today, Dan?
Great, how are you?
Doing good. So listen, Dan, despite all the concerns, the ongoing concerns around inflation and a potential recession, equity markets seems to have performed well in the first half of the year, really. Can you tell us a little bit more about what we've been seeing and a little bit more about that?
Yeah, so clearly the market's narrative have changed quite a bit. It felt like 6 months ago the widespread consensus was that we were imminently facing a recession. And really what we've seen over the last few months is the economy has been pretty strong. The labor market remains very tight. We'll continue to see good jobs growth, and the household spending has been resilient. We've seen a bit of moderation in spending, but honestly, it's been fairly resilient. Although what I would say is clearly the market narrative over the last 3-4 months has been all about generative AI. So that's really what drove the market over the last few months. I'm sure a lot of people have heard about ChatGPT, which has made a lot of headlines with consumer adoptions being quite rapid. But what's been the biggest driver for investors has really been NVIDIA, that came out with what has been a tremendous quarter where we've seen enormous demands for their semiconductors and put a spotlight really on this technology. One thing that's clear is it created a bit of fear of missing out from investors. So we've seen investors seeking what would be the next AI winner, and that drove a few names driving really outsized returns for the index. Right. The US has been the clear winner in this. The US markets tend to be really focused on technologies. And just to give a sense maybe to our listeners here in terms of how low the market breadth was this quarter, I would say that about 7 companies has been driving 2/3 of the S&P 500 return. So 7 companies out of 500 is driving 2/3, which is
2/3 of the performance.
Of the performance, which is 3 times their representation. So really we've seen a few outsized winners here.
Yeah, and we've seen that happen before, right?
Yeah.
So, I mean, what are your thoughts on AI? Is the hype real at all, or?
Yes, so I mean, it's a difficult question to have a strong opinion today. We're so early, but one thing that's clear to us is of all the hypes around different technologies we had over the last several years, things like crypto and blockchain, and this is the technology where we can see a clear use case for enterprise in the future, where I think it could be quite a significant technology for enterprise. So that's the first thing. I'd say secondly, what I've been impressed is about the launch or the product velocity. So what we've seen is companies coming out with new product integrating generative AI fairly rapidly. Some examples with Microsoft that announced Copilot, but all the big software companies have been coming out fairly rapidly adopting those technologies. That being said, as of today, the use case remains a bit limited for enterprise. It's exciting for consumers, but it's going to take time for enterprise to integrate those new technology. We know enterprise tends to be a lot slower in terms of integrating those technology. And one example I would give is cloud. Obviously now cloud feels like it's been with us forever, but it took a lot of time for enterprise to adopt it. So Amazon really launched their first version back in the early 2000s. But cloud adoptions really took maybe 10, 15 years to be widely adopted, and we're still not over with that. So it can take a lot of time for those new technology to be adopted by enterprise, and that's probably one thing to keep in mind here.
Yeah, where we are in that curve. So would you have any predictions for us? How should investors position themselves going forward?
Yeah, what I would say is it's always very difficult to predict the future. Honestly, it's going to be very dependent on how the economy performs over the future here. And as we've seen, it's very difficult. Last 6 months has been quite difficult to predict. that being said, the good thing is I feel investors got options today. And what I mean by the options is there's an alternative. Cash is now paying over 5%. So you're getting paid to sit on cash. Bonds are also yielding nice returns as of today. So I think you got alternatives. And really, I think it's going to be dependent on the economy. We heard about several different scenarios. So some people think we're going to finally get inflation under control and the economy is not going to be too damaged about it or remain resilient. And in that scenario, I think the equities will continue to perform relatively well. If we think we're heading more into a recession, bonds tend to perform better in that kind of environment where we're going to see central banks cut interest rate and bonds going to act as a nice edge. And a lot of people have been talking about stagflation, which is basically a scenario where inflation remains sticky, but the economy starts to get a little weaker. And then I think cash in that scenario is probably a good option too, because you're collecting a nice yield, and even if we keep increasing interest rate, you're going to get paid. So I think right now what we would say is there's good options, and we would really favor balancing your exposure. That's the key in this environment.
Yeah, I agree. Well, thank you very much, Dan. Hope that was informative for you guys. See you next time. Cheers.